What's up, guys? Welcome back. Yeah, we are talking about dividends once again. I know it has been a couple of months, and some of you are thinking, wait, Brad, didn't you talk about it on the podcast and make a video about how you sold off all your dividend stocks? Shh, we'll get to that in just 1 second. But I just built a full new dividend portfolio right now valued at $25,000. My goal is to get it to about $100,000 in the next couple of months. I want to show you all the 20 stocks that I put in there, but instead of just telling you like why I like them and why I think they're going to go up, I want to give you some true value. I want to give you some insight about how I pick them. Like, why do I think these are good stocks to have? Some things that you could take with you if you're new to dividend investing or new to just investing in general, and you want to start to look at how to evaluate stocks. So I'll put a timestamp down below if you want to jump to the actual stocks and don't want to hear me talk about like why I picked them or how I picked them. But I'll just leave that down below. You can skip ahead. For doing that, guys, please give the video a thumbs up if you do not want to listen to me talk about how I go about picking stocks. First and foremost, guys, you need to realize that you are not just buying a share, right? You are buying a piece of a company. You are getting involved in this company. You're giving money towards the future growth of this company. So first and foremost, like, how do I pick a stock, right? It sounds cliche, and I'm sure you've heard it over and over again, but you need to understand how that business makes money, how that business loses money, and who the competitors of that business are. Who are the direct people that are trying to take money from that business's pocket? So many times I teach seniors, they're like, hey, Finn, what do you think about this stock? Or what do you think about this? My first question is, how do they make money? 9 times out of 10, they have no idea how the company makes money, especially if it's a meme stock or something that they're reading about in the news. Most companies that we look around our everyday lives, those are the companies we understand. And frankly, for a new investor, that's where you should start. Start with companies that you know how they make money, you know how they are going to lose money, and you know the people trying to take money out of their pockets. Because you pick a company where they have endless competition, may not be that good, right? Or if you know how they make money and you look ahead and those opportunities to make money are going away, that's a really, really good place to start. Next are some pretty basic metrics that you can really find on any site. You got to pick a site that works best for you and know that the numbers going into these different sites, they may differ a little bit. So always have like 1 or 2 that you like to go to unless you pay for a service. Remember, if you go to like a free website, you are getting what you pay for. I pay for a website to get most of my analysis and stuff. That website is Stock Rover. I'm going to bring you down into Stock Rover right now. If you want to give them a try for free, I'll leave a link down in the description below. You can give Stock Rover a go. But the first thing that I'm really going to look at is revenue. Like, how much money are they going to be making? So right now on Stock Rover, I have Intel, which is one of my favorite value stocks right now. I just go to their income, right? That's what revenue is. How much money is this company bringing in? Stock Rover happens to give me the last 10 years. So if we see revenue right here, 53, 53, 52, so not that great, but then 54, 55, 59, 62. So I see a growth of this company's revenue. Now, some grow faster than others depending on their size, their age, and the industry. And those are things that you're going to look at later down the line. But first and foremost, make sure over time that company's revenue is growing. Some people like to look at the company's earnings, but I really feel like earnings can be manipulated. They can be changed according to different rules of the SEC and stuff. But pretty much if you look at the revenue is going to be a pretty clear tale, right? There's going to be no fluff going on when it comes to revenue. Now, the next simple metric that you could pretty much find anywhere is your first glimpse at deciding on whether this stock is a good value. If it's overvalued, I'm sure you've heard this. And guys, I actually have a full spreadsheet where I come up with my fair value price, my intrinsic value. If that's a video, it's probably going to be pretty boring, but if that's something that you want to see, just leave that down in the comments below. If enough people ask me to show that video of how I actually find the fair value of a stock, I will do so. But just on a very, very general, a basic sense, guys, you can look at something called the PE ratio. Now, right here for Intel, we see the PE ratio is going to be pretty low for this. It right now is 11. Okay, and 11 is actually very, very low. Right now, I think the average historical PE of the whole market is somewhere around 20, probably a little less than 20. So how do you use that number? Well, if it's lower than 20, that's probably a sign that it's probably undervalued. This might be a good time to buy. If it's right around 20, it's working around just about the average of the stock market. And if it's blown away, well above 20, right, you are going to come up with every excuse in the book to justify why you're going to buy this, when at the end of the day, it's probably just overvalued. So like I said, many different metrics go into finding the true intrinsic value or the fair value of a stock, but that's a good place to start, right? PE ratio, try and get that under 20 to have a pretty good idea that you're getting it at a roughly a good value. The next wonderful thing I like to look at, especially when it comes to buying dividend stocks, guys, is the free cash flow. Right here inside Stock Rover, if I go to the tab cash flow, this is a wonderful site. It gives it to me right here, okay? Now, if the site that you're looking at does not give you free cash flow, you are going to be able to calculate that. It's simply the cash from operations minus the capital expenditures. And you can look at your site and you will definitely be able to find those, okay? So right here, they have operating cash flow and capital expenditures, and then they calculate it for you. Not every site is going to show you free cash flow and do the math for you. Like I said, you get what you pay for. But what do they use free cash flow? Why is free cash flow such an amazing metric? Well, this is pretty much the cash that they have after everything's done. Capital expenditures is the money they're going to put into the business to keep the business running, and all the other operating costs. This is what's left, all right? And this money is what they are going to use to pay out dividends, to buy back shares, which is awesome for us, and we'll talk about that in a second, and do other things like acquiring and buying other companies. So when we see a growth in free cash flow, that is just as good, if not better, than a growth in revenue. And once again, for Intel, we will see over time, these are going to go up and down, but generally, the general trend is going to be up and up and up. 12, 10, 14, 16, 20, the trailing 12 months, the TTM, 17, it should reach above 20, 21 by the end of the year. So cash flow is the next thing that I like to look at. I am a debt-free guy, so I like a business not to hold a ton of debt. I understand when you are a business owner, you do have some debt, but you definitely want to have a business where the assets at least meet or exceed the debt for safety reasons. And once again, guys, you'll find that in the balance sheet. Assets, it's going to give you the assets, it's going to give you the liabilities, and we come all the way up here. Right now, look at Intel, 153,000, and I believe this is in millions, 153,000 to 72. This is a company that has way more assets than it has debt, and that is always going to be a good thing for a company. So the next metric I want to talk about is something you could find anywhere with free software, but this is definitely one that people don't really talk about because they don't really understand, once again, what a share truly represents. And that is this company buying back shares, or are they issuing shares and sending shares out into the market, essentially diluting your position, right? If the company's buying back stock, that means the value of one share that you own more percentage of that company. So we want to see companies buying back shares whenever they can, because that is going to mess with supply and demand, and that is going to make the cost of that share go up because demand will be greater because supply will be less. So Intel, over time, average shares diluted, we can see they went from 5,893, once again in millions, all the way down to 4,097. They are buying back shares every single year, which is a great thing if you are an investor in the company. Now, before we dive into M1, guys, I will say that when it comes to evaluating like the value of a stock and looking for things that are overvalued and undervalued, full disclosure here, some of the things in my dividend portfolio I consider overvalued. But that's one of the pros of being a dividend investor. If you're a dividend investor, you're really not in it for the growth. You are in for that consistent passive income that is going to come over time. And that income generally isn't really affected by the share price, unless there's something drastic that happens and maybe something goes crazy and the share price plummets and they have to cut that dividend. The share price can go up, it can correct and come down, but you are going to get paid the same amount each and every quarter. A common misconception is that the share price is the thing that affects the dividend. The dividend is determined well before it's paid by its board of directors, right? So the yield is constantly changing with the share price because of that set dividend. So because I'm not really looking for growth and I don't care about the value and I could take a little bit of a correction, in this case, I find it okay to buy some dividend stocks that I would consider overvalued. I'm not going to go crazy overvalued, but yes, admittedly so, all of these would not be the greatest value. I definitely look more into value when I'm thinking about my leaps options and when I'm thinking about growth stocks because I want growth and I really can't handle a really huge correction if I buy an overvalued stock and I still want it to grow and then it corrects. That's not going to be good for me. But when it comes to dividends, that's okay. Let's dive over to M1 Finance. Now, this M1 Finance portfolio, as far as dividends concerned, was started last week. You do see I have a little bit of gain and a little bit of return. This is where I was just holding VTI for a little bit and holding cash, and you could see that dip right here. I think it was last week. Yeah, it was last week. I had my portfolio valued at $21,000. I sold off all my VTI and it went down to zero, and I knew that I was going to use that to now make a dividend portfolio. So really, I'm really at a gain of pretty much nothing. I just started this portfolio. And for those people in my Discord and everything, you guys know what a huge fan I am of M1 Finance. And you're going to see, I'm going to show you the things that I really, really love about it inside this video. But guys, if you do not have an M1 Finance portfolio, meaning you don't have just a set it and forget it, like throw some money in there, let the robo investors set the percentages, I really, really highly, highly advise you to just consider it. Think about it. Try it. I'll leave a link for it. You could try it out, get some money yourself. M1 Finance is something that I really didn't like when I first started, and it's really, really growing on me. So right now the portfolio valued at $26,000. I'll leave a link. The great thing about M1 is I could share this pie with you as well. You can click in and look. I don't think it shows you the actual dollar amounts, but it definitely shows you the percentage. You could see that I have dividend stocks, and then I have a couple stocks in here for my M1 Finance credit card, which I just got. Here are the 20 stocks inside that dividend portfolio. Some of these you all have heard of. They're in everyone's dividend portfolios. Some of these I've owned, some of them I've never owned before. And really, I'm not going to dive into all 20. We'd be here all night. You can kind of ask me, DM me, jump in my Discord if you have any questions about any particular stocks in general. I'm definitely going to be updating this portfolio with videos every single month. Like I said, I want to try and get this to $100,000 as fast as possible. So maybe each time I'll talk about a couple here and there and why I really like them. But guys, you're going to see all of them are pretty basic blue chip dividend kings or dividend aristocrats. I know how they make money. I know how they lose money. I know who their competition is, and they have a long track record of revenue growth, good free cash flow, payout ratios that are awesome. Like I said, there's probably not going to be too many surprises here. And frankly, that's okay, right? I think when we get caught up in YouTube and Instagram and this like glamour life that we have to like surprise people and shock people with the next best thing, when we see, if we just keep it simple, it's not that big of a deal. Realty income is a REIT, guys. If you are going to be looking that up, right, you're going to look at the payout ratio. You can't do that with REITs. You have to look at FFO, funds from operation, Target, Lowe's, AbbVie, Procter & Gamble, J&J, Kimberly-Clark. I cannot believe how many Kimberly-Clark products I have. If you have a kid in your house or you have a woman in your house, there's Kimberly-Clark just scattered everywhere. Look them up and see how many products. It is insane. It's almost just as much as Johnson & Johnson, who's really just an ETF with the amount of things that they own. Aflac, Starbucks, like I said, there are some things in here that are severely overvalued. I think Starbucks is overvalued, but I'm a little bit happy with their growth, their dividend. They're like a little bit of both for me. Pepsi is one of my favorite stocks. There really is. Also an ETF with the amount of things they own. Every time I throw up what PepsiCo owns in front of my students, they're like, oh my God, I didn't know that they owned all those foods, all those beverages, things like that. 3M is just a champion stock. JP Morgan, QCOM is probably like one of the ones that I didn't really know about, kind of new to the portfolio. A couple people in the Discord, they got my attention to it. I did a little bit of research and I was definitely happy with it. Caterpillar, Southern Energy, I was really torn between Southern Energy and Duke Energy. Both amazing stocks. If I wanted two utilities, I probably would have put both. I've had Duke Energy in the past. I've never owned Southern. But right now, with their value, Southern had a better value. Their revenues were a little bit better. Their dividend was a little bit better. I think I'm just getting them at a better price, and that's why they came in. Waste Management, I love them. Everyone's always going to be throwing things away. They don't have a lot of competition, and they're also going into other sectors. I did a whole video years back on just Waste Management, why I love it. Verizon, I used to be a huge AT&T guy. They had an amazing dividend. That's probably going to go away. Verizon a close second. McDonald's, everyone thinks they're a food brand. They're really a real estate company. They're not going anywhere. They will be around. Intel, one of my favorite stocks. Value, whatever. I am just buying them up. I'm selling options with them. I'm getting their dividends. I'm just all over Intel for many of the reasons. That's why I use them for the example over there in stock Rover and Lockheed Martin. I have all of these set to 5%. I am okay with these being 5% of my portfolio. And as these change, guys, this is the great thing about M1 Finance. Right now, these are 5-1, 5-1. If I were to put money in, it would automatically add money to the things that are low, the things that are taking a little bit of a hit, and balance all that out. So the money, if I put money in, it would automatically buy these ones at the bottom so that everything was nice and equal. So if something was on a run, we let it run. If something's taking a hit, it automatically buys a dip, it self-cleanses and keeps everything nice and level. Right now I'm happy with 20. I have some more on my wish list. Maybe it'll go up to 25 if some of the things that I think were overvalued. That's really why, like I said, Duke Energy, I'm looking at a couple of different things that it was either this or that. And I want to make sure that those that are on my watch list, if they drop down a little bit, maybe this will get to 25. But really, I like 20. I think that's a really, really good look for me, and we're going to watch it, and we're going to see exactly what happens. And to get the elephant out of the room, guys, 4 months ago, I definitely made a video about how I sold off my dividend stocks. And, number one, I'm allowed to change my mind, right? But it's not so much changing my mind. I'm educated. I'm educating myself every single day through my Discord, through other communities, through reading. And I found out that, getting rid of that was just trying to put on a show or, just to do it for the sake that I did it. I say all the time when it comes to options trading that I'm not going to pass up money because I have to pay taxes. And one of my biggest arguments against dividend stocks was those forced taxes that were coming in. So I essentially was being a hypocrite on the things that I advised. So I got rid of that. I want to hedge against maybe a downside or a neutral market, which I don't know if it's coming. I'm not saying this is going to be a crash, but I definitely want to prepare myself in the case that we have one of those lost decades again where the stock market doesn't move, right? If the stock market is up or down or neutral, I'm still going to get paid my dividends. So I at least want to have that portion of my investing pie. I want to diversify. I want to have index funds and ETFs. I want to have growth stocks. I want to trade options. I want to have crypto. And to say that I wasn't going to have dividend stocks, just not to have them, like I said, if I sound like a hypocritical asshole, like I said, I just changed my mind. And the last piece is that, just because I don't like something doesn't mean I shouldn't educate on it. I found this out in my Discord. I shot myself in the foot in Discord by not having chats and not letting it really go because I didn't want to talk about those things or I didn't think they were from my Discord. I was taking away value, and I said, we still need to educate and learn and do other things. And if I would have kept that closed mindset, who knows what's going to happen. So I may not love dividends. I really, frankly, still don't love them, but they are great for some people. And I do have a platform here on YouTube, and I want to show you the value that you can bring yourself by investing in dividends. That's really why I flipped the script from 4 months ago and why I'm excited to start doing this. 1, I shouldn't care about taxes. I want to make money. 2, I want to hedge against a neutral market or a downside. And 3, I am here to educate. Guys, leave in the comments down below if you want me to make that video on how to find the fair value of a stock. Try out M1 Finance. I promise over time you will learn to love it. It's become one of my favorite brokerages. Check out Stock Rover if you are looking for a little bit more advanced stats. Give the video a thumbs up, guys, if you did get some value or if you're excited about seeing me start to buy and show dividend stocks on a regular basis. So I see you guys in the next one. Stay positive. Work really, really hard. Always please be kind to other people. Hope you have yourself an amazing day and even better tomorrow.